Hello dear followers and copiers! I'm starting a new series here on YouTube where I will discuss major events affecting markets and my portfolio to keep you updated. In the first quarter we had a pretty bumpy ride. There is COVID, Ukraine-Russian war and rising interest rates, which all contributed a lot to market volatility. I'm very happy about our portfolio performance. We are at plus 1.15% at the moment, which means that we are quite resistant to current market conditions. After 2 years of constant COVID outbreaks, we are finally facing some reopenings with reducing travel restrictions. One exception here is China, where at least 44 cities are under full or partial lockdown. Even though this outbreak is adding more on supply chain issues and the world's rising inflation, I believe that we passed the worst with COVID and it is not the biggest problem we are facing at the moment. Some of the sectors that might do well in reopening are services sector and traveling. My investment in case of reopening is Disney. Big part of their revenue comes from theme parks, so reopenings should have a positive effect on their business. The war in Ukraine is hitting economies across the globe. Russia's invasion of Ukraine and sanctions have a significant impact on supply chains for commodities. When Russia invaded Ukraine, commodities prices spiked. Since they are both major players in commodities market, oil, wheat and gas prices exploded. These contributed to higher costs of transportation, food and heating. Range of sanctions have been imposed on Russia. Japan, US and Britain have sanctioned billionaires and major financial institutions with close links to Russia. All this shortage is adding to rising inflation across the world. US annual inflation rate rose to 8.5% in March. Consequently, Fed has begun to exercise announced interest rate hikes. Higher interest rates means that borrowing money is more expensive for both businesses and consumers. Fed's last meeting was in March. They have declared to raise interest rates by 25 basis points. I think that we will see even higher volatility before their next meeting in May because market expects them to act even more aggressively. We have started a season of quarterly earnings. Last week, major banks reported their results. Earnings were quite mixed, where JP Morgan disappointed, but other major players like Citigroup, Goldman Sachs and Morgan Stanley surpassed expectations. Despite good results, experts are warning investors that recession is right behind the corner, so we should be careful with our investments. The only bank I hold is US Bancorp. They have also released their earnings on Wednesday. Net income was reduced but still beat the expectations and sent the stock soaring by 4%. As I said before, my portfolio is doing very well at the moment. Here I would like to point out why it is performing better than major indices. Asset allocation in this economy is one of the most important factors to consider. In the short term, food, commodities and precious metals will probably perform better than technology over the next 2 quarters. Best performers in my portfolio were definitely BHP, Rio Tinto, Gold Barrick, Amgen and Coca-Cola. I have also added Meta, which is trading at minus 44% of their all-time highs with a P ratio of 16, which is, if we take a look at their growth, a very cheap valuation. Maybe this is not a bottom yet. That's why I established only one position and I will add more if I will see that we are heading even lower. We have received quite a lot dividends in this quarter. The biggest payment was from Zim Shipping, which paid enormous $17 per share. The second big dividend was from BHP, which has a dividend yield of 7.6% at the moment. That's all for today. Thank you for listening, and if you have any suggestions, please feel free to write them in the comments. Trade safe!